Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hiral Dadia. One company that has been in the news is BLS International. The stock has seen gains of nearly 50% in the last 6 months as well. And the latest update is the tie-up with regards to Kotak Mahindra Bank as well as the global outsourcing visa contract for Slovakia. Let's welcome in our guest, Shikhar Aggarwal, Joint MD at BLS International and Chairman at BLS Services to discuss more in terms of what would this actually mean for the company and what is the roadmap going ahead. Shikhar, good morning and welcome to the show.
Good morning. So definitely, the
Yes.
contract that we have won with Kotak Mahindra Bank, for a business correspondent, banking correspondent, where we have to open 1,000 centers across India at different strategic locations, is a big win for us. In the BLS e-governance business, where we operate the banking correspondent business, we've already been operating around 20 to 30,000, 25,000 centers for different banks, including State Bank of India, Bank of Baroda, Karur Vyasa Bank, and now we have started working with private sector banks like HDFC and Kotak Mahindra Bank is the recent win. Definitely, with this, the objective of taking banking to the rural India to tier 2 and tier 3 cities will be a big win. And also it will lead to a very good revenue and profitability of the company. BLS Services, the whole last year did 240 crores of revenue. And, we have been seeing massive growth. This was 100% growth compared to last year. And now we've also plans to list the company. We plan to do an IPO for BLS Services.
Okay. So in terms of BLS Services, what's the kind of revenue trajectory you have with Kotak Mahindra Bank as one of the tie-ups that you've done? What would it translate into?
See, these are the codes that are being started for the first time in different strategic locations across the country. So, this is the first time that bank is doing this step. So we don't really know exactly how much revenue we will be generating. But as I've said, we are doing 240 crores of revenue in BLS Services, that we did last year. We are seeing massive growth. So definitely, this will add to the bottom line and revenue of the company. We already have country regional managers, district managers, so definitely there will be limited additional expenses, but increase in revenue and profitability much higher.
Okay. And as you mentioned about the listing as well, yes, in the month of August, the announcement did come in. What are the kind of timelines you're looking at with regards to the IPO?
So IPO was already, we've already filed the DRHP with SEBI, and depending on the SEBI's approval, it might take 1 or 2 months or 2-3 months. But our plan is to list as soon as possible, as soon as the approval comes. In this listing, we are actually offering 2.42 crores of shares, which is a preference share allotment. So money will be coming into the company. The advantage is that we will be utilizing this money for growth and acquisition within the company. And we will not need to use the money from visa outsourcing services, consular services, that itself is growing heavily, for this business.
Right. So currently, what percentage of the revenues come in from BLS Services?
Currently, as of last year, around 20% of the revenue comes from BLS Services. 80% of the revenue, we did around 1,500 crores of revenue last year. Around 80% of that came from visa consular services, which is also growing, humongously. If you see in the first quarter, we did overall revenue of 385 crores. And, we did an EBIT of 80 crores, which was 150% growth compared to similar quarter last year. Also, our EBITDA margins are now ranging in the level of 20%, whereas is also a massive growth, primarily because of economies of scale and also, because of increase in revenue that we've achieved.
Right. Another question I had was, I'm coming back to the Kotak deal altogether. We've said the contract right now is for a period of 3 years, but any number crunching wherein how much revenue you could expect out of this, and if there is an additional extension of a year, what would it actually translate into?
Yeah, so definitely, I think the revenue that we are doing right now in BLS Services around 250 crores that we did last year. The banking correspondent business is giving us the majority of the revenue. Exact amount of revenue that we will generate per center is depend on number of services that we start. So it is very difficult to estimate the exact revenue, but definitely if there is an increase in duration, which we expect, normally all these banking contracts are structured in a way that they are initially awarded for a certain number of years and then they are extended. So, we've been working with the SBI for the last 10, 12 years, and we've been working, with other banks. So definitely there will be a major boost. And not only that, we've started offering digital services, insurances, and different kind of services through these centers. So definitely there will be additional revenue and profitability.
Categories is facing.
I want to talk about the Slovakia tender that we recently won, for the visa outsourcing contract, which is a very, very big win for us. It is the second Schengen global contract that we have won. We currently work for different countries in the European Union, like Spain. We currently have a global contract that we again won in April. We work for Germany, Italy, Hungary, Portugal, Poland, and now this Slovakia global, and open 54 offices. It is an exclusive mandate for all the Schengen Slovakia visas, which entails different categories of visas, which is business visas, tourist visas, and work visas also. So, which is a big win for us.
Right. And what would that actually translate into again from a business and revenue perspective?
See, in Slovakia in 2021, around 21 million visitors visited. Not all of them need visas, but it is a growing economy. We expect that a minimum 15 to 20% growth in top line and bottom line because of this contract. And as we open offices, definitely there will be an increase. This is an upcoming big tourism destination. And definitely with our reach and network, and the technology that we have adopted, definitely I see that from the current existing system, whatever has been being operated, we can definitely increase the revenue further.
Right. So currently, how does the margin profile work on these services for you? How much will it be currently? And are you seeing, a fixed rate that is agreed, or how does it function?
So, see, if you see our historical margins, we've been doing 15 to 16% of historical margins every quarter. Margins in the visa counselor business are a little higher than the e-service business, but on a consolidated level, we were doing 15, 16%. After, really spending a lot of time and effort and using different strategies, we managed to increase the margin to 20%. So our aim is all the contracts that we are running to maintain the same level of margins of 20%, at a EBITDA level. And if you see all these new contracts that we are adding, we do not have to do any additional capex in majority of the countries. Our existing network will be utilized even for Slovakia, wherein our existing offices, can handle volumes. If need be, we will move into bigger offices. But from what I see, we can actually, open additional counters on our existing centers. So additional revenue increase will not increase at the same level.
Right. So another aspect is, as you mentioned, that the visa services, the margins are higher as compared to the e-services, right? Post the listing of the e-services business separately, do you think that BLSL International's margins then will probably inch higher? And if yes, what would that trajectory then look like?
See, definitely consolidated margins right now, 20%. A little bit margins are lower in BLSE services, and international has higher margins. So definitely we will see certain, uptick in the margins of BLS International. But our objective is to actually increase the margin, what we are generating in BLS International. So we are working towards that. Definitely we have increased a major jump from 15, 16% to 20%. And over the next few years, as we win more contracts, and if, we can start them within the existing office premises, then definitely there will be a more increase in revenue than the expense. And definitely over the next few years, we are striving towards increasing the margins.
Right. Overall, to understand with regards to the Israel-Hamas war, has there been any impact in terms of services from your end?
See, we operate in 64 countries, and we currently work with more than 40 client governments. Definitely, we work in different geographies across the world, and some events are happening in different parts of the world. They have minimal impact because on a consolidated level, the revenues and margins that we generate do not get impacted. So from BLS International point of view, we do not see any impact on our revenue and margins because of this incident.
Right. And if not from a financial perspective, but an operational perspective, how are you seeing it? How are you seeing the industry in these regions pan out from here on? Just to get a perspective.
See, COVID was the worst year for us in terms of business. visas were almost zero, and we strived through that and got out with a profitable company. So now we have learned really how to survive in any scenario. So sometimes when these kind of things happen, definitely operations maybe in those areas might get affected for a limited amount of time, but anyways the operation from those areas is not big for our company. So definitely there is a, maybe in that area there's a change, but other than that, we are seeing growth in numbers. If you see, last year we had done 70% of the pre-COVID volume. This year we are already seeing increase in volume coming from countries like China, and now we've started seeing encouraging numbers coming from that. And across India, we've seen a major surge in tourism, for outbound tourism from India, from Africa, from UK, different kind of markets.
Right. Very lastly, what's the kind of growth you're looking at in terms of FY24?
See, if we talk about growth, if you see what we currently are doing, last year we achieved a revenue of 1,500 crores at 70% of the application volume, pre-COVID application volume. And the profit that we delivered of 200 odd crores, 212 crores, was double than 2019 numbers. This year we expect further growth in the application count. We definitely want to maintain the numbers that we did in the first quarter. The new contracts that we are adding, some contracts that we have won last year, like Germany, Italy, Hungary, we've started operationalizing them. Revenue has started coming from them. The new contract for Slovakia that we have won should be operational in the coming months. So definitely there will be a further increase in revenue because of these additional contracts. And then there is a big opportunity, of tenders that are being coming up for bidding. These are some of the tenders that we have won from that only. There's upwards of $1 billion opportunity of contracts that are coming up for bidding, that we are bidding for. We are definitely, when those get materialized, depending on what geographies, what regions we win, definitely there will be a further increase in revenue profitability. And now, because of the network that we have, our cost of starting a new operations is not the same that we initially had. We already have, people, companies, setups in those countries, so the costs are negligible. And also we are looking, because the money that we have on the books, we are looking at acquisitions in different geographies, actively looking at acquisitions that suit our requirements of return on capital, will lead to further revenue and growth, and could lead to an economies of scale for us.
Right. So I think lots brewing as well with what's happening. Thank you so much, Shikhar, for joining us on the show and sharing the views. So that's the management of BLS International with their trajectory going ahead. But moving on, another stock that has been in focus, which has been making the news today, is IIFL Security. Stock is up little over 6%, and this is mainly on the back of the way earnings have panned out. In fact, overall, consolidated profits are up 32%. My colleague did speak to the management as well. Let's listen in what they have to say.
There a disparity between both the numbers, considering digital loans, which is part of IIFL Finance's core business portfolio? The AUM of digital loans has risen 77% on year, but still there's a disparity. So if you could explain that for us, that why is there a difference between both the numbers?
So, on the standalone financials, the almost a large chunk of the portfolio is sold to banks under a direct assignment transaction, which results in upfronting of the income which comes into the P&L. So historically, whatever portfolio we have sold to bank has been taken as an upfront profit in those periods when they were sold. But as time progresses, as though that portfolio still stays, with the widening of the MCLR, there have been some adjustments that happened. The new portfolio that we have sold, that has been going at a lower spread, because of which there have been a hit into the P&L on a quarter-on-quarter basis. That is one particular reason. Second is there's a marginal increase if you see on our NPA in the gold loan business. With that marginal increase is resulting in some reversal of income, which is causing this marginal dip in the overall income for that standalone financials.
Okay. So if you could break down the non-controlling interest for our viewers, what is it and how does it impact the net profit?
So, non-controlling interest. So last year, ADIA came as taking 20% primary stake in our subsidiary IIFL Housing Finance. So with 20% stake taking in ADIA, so I would need to carve out 20% of my profit, which is the non-controlling profit, which goes towards that, which doesn't deserve to the parent company. So on a consolidated basis, when I account for my income, I will shave off the 20% of the income from the housing subsidiary and then aggregate the total PAT. which is causing this 20% dip in the PAT of the housing company when it comes and gets consolidated with the parent company.
Okay. Sir, if we look at the standalone numbers, the finance cost and the recognition of financial loss, that has spiked considerably. So what were the main reasons? These were the main reasons for the drawdown in the standalone numbers. So can you elaborate a little bit on that?
So finance cost I can't take in isolation saying it's gone up by applying a percentage. Finance cost is depending on what kind of borrowing you have done across periods. So obviously, interest rates have moved up by around 250 basis points from an MCLR. From a repo perspective, the MCLRs have gone up. But our cost of borrowing has not gone up beyond 25-30 basis points. The reason for the spike that you see is purely a base effect. The aggregate borrowing that we have done, or the average borrowing that we have done in the period last year to the period this year, has actually gone up. And that is causing an increase in the finance cost. It is not a question of finance cost going up that much. Finance cost would have gone up by around 30-40 basis points between the two periods. But beyond that, the larger impact is coming because of the base effect with the average borrowing going up with the increase in business and the business volumes going up as well.
So last question to you. What is the way ahead for IIFL Finance in terms of financial inclusion strategy, the technological advancements that you are planning ahead, and co-lending arrangements? Are we going to see anything there? And if you could give some targets, growth targets for FY24 and FY25.
Okay, so I'll take the last question first. From a growth target, while they could be individual businesses which might grow at different pace depending on the opportunity and the macroeconomic scenario in these products and these offerings. On an overall CAGR growth perspective, we'll look to grow at a CAGR of around 25% on an AUM basis, given that we have expanded well and we have added a lot of branches pan-India. That's on the growth over the last couple of years. Beyond that, it's a difficult thing to predict. With regard to co-lending arrangements, our co-lending book has been growing well. The share of off-book the share of co-lending in the off-book has gone up, and because of all the partnerships and tie-ups that we have done across product, more particularly in our home loan business, in our gold business, and also of late in our microfinance business as well. And there is enough opportunity here as well because banks are keen to buy quality retail assets, and we have started early in this, and therefore we have hold a very good relationship with them. So this business will continue to do well and grow. Then, what was the next question? Sorry, I missed the orders there.
And is there any announcement on the technological front or financial? What is the financial inclusion strategy going forward?
So on the financial inclusions, our housing business is entirely affordable, and it also tags well with the priority sector requirement of multiple regulators, whether it's the NHB or the RBI. So therefore, in that portfolio, there are a lot of multilateral investors who come and lend us to fulfill the objective and requirement of for example, green housing and some of the other social inclusion norms as well. So therefore, that's one business which will help the entire objective of financial inclusion. Microfinance for sure would meet the objective of financial inclusion as well, because there are a lot of new to credit customers, there are a lot of borrowers. The geographies itself which we have expanded is hugely underpenetrated from a credit growth, from a credit coverage perspective, which will automatically help us in transition and supporting the financial inclusion cause of the regulator and the broader requirements. So financial inclusion will play a very important critical role given the way we are operating. Now, lastly, if I talk about gold as well, we have expanded a lot in gold. And as you expand, you move into geographies which are unventured, which are more rural-centric or semi-urban, where again the credit coverage has been relatively lower. And as you get in and tap in more customers, you automatically go and touch on new to credit customers and customers who have not availed finance in the past. So we believe that our role in financial inclusion, which keep on expanding and keep helping us meet the overall objective of the government.
So that was the management clearly indicating as to what's in store going ahead. Overall, lots of stocks buzzing in the broader markets as well. We were going to look at the FMCG pack, but we're completely out of time right now. FMCG have Nestle, which has already reported their numbers, and they have announced a stock split in the ratio of 10:1, and the other companies are yet to announce their numbers. So that's going to be a sector we'll be focusing on. But clearly, Nifty FMCG index is trading with cuts of nearly 0.5% as we speak. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.
And to our understanding, the mass consumption is taking a toll on the volume growth. Specifically, if I have to point out, the states which is having a per capita income less than $1,000 is seeing this prolonged pain. And to add to the worries, I think the uneven distribution of rains is also creating some problem. There are various reports which is coming up. Some are pointing out the lower agri output in this season. However, we need to wait and watch. The second point which is there is that we have to consider that the inflation is here to stay. And in that scenario, though the input prices has corrected, not outrightly, most of the companies has passed on the lower prices. I think there's a wait and watch. And third point which is there is that given this, the price annualization is going to happen. So there is no price inflation, rather there is a deflation in price. So that will have the impact on the top line in terms of value and volume. To our sense, most of these staple companies should report between 3 to 4% volume growth. Under 5% is safer to say that.